Well, sellers across Ohio are panicking because price cuts are exploding. In Columbus, 21.9% of all sellers cut their asking price in the month of August alone. And that's actually up 2.3%. And in Cleveland, 20.7% of all sellers cut their asking price. And in Cincinnati, nearly 20% of sellers cut their asking price in the month of August alone. So, does this mean that buyers are finally starting to see some relief, or are these price cuts just a mirage? Well, that's what we're going to look at this morning on the Ohio Housing Nerd. Thanks for joining me. This is our deep dive into the Ohio housing market that we do every week. My name is Jason Ferrier. I am the Ohio Housing Nerd. I'm a realtor. I'm an investor in Central Ohio. I've been doing it now about 8 years. And this is all about Ohio. That's what my channel is about. And this is your time to learn about the Ohio housing market and going beyond the headlines and going beyond the typical social media post that you would see from a cheerleading realtor. So that's what we're doing today. I'm going to review some major markets across Ohio, but I'm also going to take a look at some rural areas of Ohio because I got a lot of requests saying, hey, housing nerd, you're only reviewing major metros. You need to hit on some, some counties that don't have as much population. So I'm going to do that today. And I think it'll be very eye-opening. So yeah, let's get into some data. Go ahead and join in. I'll give some people some time as I start to review this, and all this will be chaptered in the description. So let's look at new listings in Columbus, Ohio. Let's start in Columbus. So what we're seeing, quite frankly, throughout the United States when it comes to new listings of homes for sale, in other words, people putting their homes on the market, it goes on the MLS, obviously, and usually hits Zillow and whatnot. We're seeing the numbers of folks actually putting their homes on the market decline. We're seeing that really struggle throughout the U.S. And I reviewed on my Redfin video yesterday that I do on a national update. I have a national channel for the housing market. That's called the Housing Nerd. This is the Ohio Housing Nerd. I reviewed maybe 25 markets, and that video will come out here in the next couple of days. But most markets across the U.S., most major markets are seeing serious declines in new listings. Like new listings are falling. So when you think about that, it's like, why is that happening? Well, a lot of reasons, because sellers are kind of taking their toys and going home. They're like, man, I'm not getting the price I want, so I'm just going to take it off them. I'm going to not list the house. And then we're also seeing, and let's look here in Columbus and see what's going on. Well, with new listings anyway, I'll just cover that briefly. We're down 0.4% according to the latest Redfin data. So in the Columbus metro area, you've got you've got a fewer people putting their homes on the market now compared to last year. And I want to know what you think about that. Why is that? A lot of reasons could be because mortgage rates are still elevated. People don't want to give up their lower mortgage rate. And honestly, buying demand hasn't been fantastic this year. So maybe sellers are getting the message. But that's new listings. And if I look at active inventory in Columbus, let's see what's happening there. It's elevated still in Columbus. I mean, we're up 17% or so in the number of homes on the market. And there's just more inventory. But the question is, where is that inventory? In a lot of these areas, the inventory is inventory that you may not want, and I'm going to dive into that here in a minute. I broke this down as far as what's active on the market. I think you're going to enjoy that. So anyway, we're going to look at stuff like this today. Let me just look at a couple comments and then we'll get rolling. TH2, what's up? Good morning, TH2. Thanks for joining. I think maybe housing was way too expensive. In many areas, it is. What's up, Nick S? Yeah, in many areas, housing is just too expensive. And buyers are just like, no, I'm not paying that price. It's going to be really interesting to see what happens if interest rates fall, meaningfully fall. Like right now, let me just check interest rates. I'll check the 10-year treasury first because this is really what follows interest rates, right? Or what interest rates follow as far as mortgage rates. 4.10. If one of the things that was interesting is that when the Fed cut rates, last week, 2 weeks ago, whatever, you actually saw a spike. If I go back a month, you can see how this spiked right around when mortgage rates or when the Fed cut rates. So the 10-year spiked and mortgage rates spiked. When I say spiked, I mean, they didn't go insane. I think they were up to like 6.55 or something. And now the 10-year has started to fall again, and mortgage rates have kind of followed suit. So right now, mortgage rates are 6.36%, according to Mortgage News Daily this morning. And so they're not down a ton, but they've come down from, 6.55 or so after the Fed cut. Again, the question is, what happens if these rates fall further? And to Nick's point here, he thinks housing's way too expensive, or do I think housing's way too expensive, or maybe housing's way too expensive? Yeah, it is for a lot of people. If rates come down, people will probably buy more houses. If they come down a lot, home prices will probably go back up and continue upwards. The weird thing about the pricing right now is that price growth is very compressed. It's not really growing. In most of the U.S., we're down, according to Zillow, year over year. But if you look at like Franklin County, Licking County, Hamilton County, everything with the exception of Cuyahoga County, and some outlying areas of Ohio, prices are not growing very much year over year. They're just not. And so maybe we'll see that today as we go through this data, but it's not skyrocketing like it was the last few years. So there could be some relief coming up at some point. I don't know. Ohio's affordable considering prices in the rest of the country. Yeah, it's important to remember that too. So when I'm talking about home prices here in Ohio, I'm talking about for Ohioans, right? If you're moving in from another area of the U.S., you're like, I'll take 3, please. I'll take 3 houses because how homes are cheap here, right? Even in the quote expensive areas of the state, like if you're in Dublin, or you're in New Albany, or if you're in Shaker Heights, right? Places in like Warren County, Plain City, Ohio. You think homes are expensive, being 900 million, million one, million two. I mean, that's like everyday USA and a lot of other markets. So Ohio is pretty affordable. You're right. It is overall. Taxes are a nightmare here, but if you can afford $1 million house, hopefully you can afford the taxes. What's up, Ma Deuce? When Fed cut rates, it affects QHT banks pay to borrow from other banks. Doesn't necessarily mean they'll give you a cheaper rate. That's true. So you got to look at that 10-year and you got to look at mortgage rates. There are people out there right now on YouTube, unfortunately, that are saying like they're making predictions that that 10 years not going to come down and that mortgage rates aren't going to come down at all. My bet is that they will come down because the administration we have will do anything they can do to get the 10-year treasury down. I don't know what those levers are that they'll pull. Nothing shocks me, and it really doesn't matter what administration's in there. They want lower rates. They do not want lower asset prices, meaning lower home prices. Notice when anybody talks about the housing market from the White House, what do they talk about? They talk about mortgage rates. They talk about the payment, not the price. So don't get it twisted. They're not like, hey, we want lower prices for all Americans on houses. Sure, they do. They want lower rates so home prices continue to go up. Pay no attention to the price. Pay attention to the payment is what they say. What do you think? I probably know what you think, but just asking. It affects what banks to borrow from other banks. That's true. That's the Fed rate. Yeah. It really depends on what the 10-year does, right? Good morning. Is there a way to predict future property taxes for a new build? Boy, that's a great question, Nathan. I would say, it depends on how far out in the future, right? The first thing you could do is look at the assessment schedule. So there's an assessment schedule. I'll actually put it in the link on this description. Let me just write it down here. So there's a link that I'll give you that you can go in and actually understand when property taxes are reassessed, because it happens every 3 years. Every 3 years in Ohio, they do a update to property taxes, and every county is different. So it's every 3 years in Ohio, but it's not, every county doesn't follow the same schedule. So I would look at that first, and then you'll know, all right, if they were assessed right now, this year, they won't be reassessed for another 3 years. So at least you know you have until then. That's the first thing I would do. The second thing I would do if I was building a new house is I would look at what other taxes, other increases had happened in the area where I'm buying, particularly on new houses. So go back into the auditor site, and if, I don't know if you're using a realtor or not, but they should be able to do this work for you. Go into the auditor site and go, all right, that house was built brand new 2 years ago, and the taxes went from here to here. That's a way to look at it. And you can also go into the county auditor's website, and it'll give you a property tax estimate based on the value of the property when you close. So it asks you, it says, what's the actual cost of the property, the value of it, not the assessed value, the actual value. And then they'll give you that rate, and it'll actually tell you in a lot of cases what the property taxes will be in the future, not what they are right now necessarily. So that's a way to do it. And then I would just plan on increases. Like I would, you could even, if you really want to get granular, you could go back in time on the auditor's website and look historically at how much the tax bills were for that property, or a property very similar to what you would be building. Then just look and say, all right, well, taxes have gone from here to here to here to here to here. On average, it's an increase of X percent per year, combined annual rate of growth. And then just bring that out, maybe using a Google document, Google Sheet, bring it out through the history of, the future, or through the future, and say, all right, in the next 5 years, my property taxes will probably go from here to here in 10 years, from here to here to here. It's going to be a guess, but I would plan on continual increases. I would not plan on them to come down. Even if home values fall, I don't think property taxes will fall. I don't think they will. Everybody's been used to the money, so they're going to keep that going. That's a great question. Really great question. I'm going to use that in one of my videos, I think. That's a great question. Thank you, Nathan. Renting is so expensive. Yeah, it can be. Yep, renting can be expensive. I'm seeing rents kind of level off in Ohio, though, at least on the properties I own. Higher prices equal more property tax. That's true. Government has no incentive to lower home prices in a boomer economy. You mean a booming economy or a boomer economy? Which one are you talking about, Andrew? Yeah, I agree. I mean, it's not only that they want property taxes to continue to go up, but they want asset prices to go up because they all own assets. Like the people who run the United States government, the people that run the Ohio government, you don't think they have tons of real estate they own? You don't think like Troy Balderson or, even though he doesn't run Ohio, but like JD Vance, you don't think Trump, you don't think they've got tons and tons of real estate? They absolutely do. All their constituents have real estate. They want lower rates. They want higher asset prices. That's what they're after. They want inflation. You should check out Uneducated Economist, his YouTube channel. He does a great job of explaining this. But in the environment we're in with paper currency, you have to have inflation. You have to have inflation to make things run. They don't want deflation. The notion of deflation is like the worst case scenario for them. That's why they're putting the job market ahead of the inflation numbers. The inflation numbers, they're like, hey, we want to get to an average target of around 2%. What? What does that mean? Doesn't mean anything. It's like an arbitrary number. They just want to make sure that the train keeps going. So they're going to keep inflation going, in my opinion. Thank you for all the insights. What's up, Charles? How are you? Good to see you. Madus, what's up, Jason? Please explain to the others tax petition signature initiative. Yes, I will. So Madus is saying here, and thank you. I should bring this up more often. There is a movement right now in Ohio to abolish property tax completely, abolish it for everybody, landlords, commercial, like anybody who was paying property tax would not pay property tax anymore. It's an abolishment. There's a movement to do that. And right now what's going on is there are petitions that you can sign and there's many signing locations, and I'll put the link in my description below as well on where to do this in your area. But there are petition signing locations throughout the state. And if they gather enough petitions, enough signatures on the petition, they will add this to the ballot. And it'll basically be something that says to the nature of, do you vote yes or no to abolish property tax in Ohio? So Ohioans will get to decide at the ballot box, if we get enough signatures, if property tax will be abolished in the entire state. It's not like it's not necessarily an amendment or anything like that. It's an abolishment of property tax completely, just an abolishment. And it's all citizen ran and citizen led. There's no politicians who is running it. To me, that's why it probably has a lot of momentum, because we don't have to rely on a politician. Some feel differently about this, but quite frankly, I don't want a politician involved. Now, I'm sure a politician's going to glob onto this. They will. If it gets legs and it looks like it's going to pass, you can better believe a politician will glob onto this. Like, they'll all of a sudden be like, hey, this is a good thing for everybody, just to make themselves feel good. But in reality, this is a citizens-led effort. I actually interviewed one of the people I've interviewed several people on my channel about it, but I interviewed someone, I did another interview last week with Beth Blackmar. That video will be out in the next few days as well. And she kind of gives us an update on what's happening with the petition. But if they gather enough signatures, it will be on the ballot probably in November of 2026. That's what they're shooting for. And yeah, I mean, you can get involved by signing the petition. You can get involved by telling people about it, or you can get involved by actually gathering signatures. And I'll have all that in my description once I'm done with this live. So anyway, thanks, Madus. I appreciate it. A lot of good discussion before I jump into all the fun data. Let me know if I explained that right, Madus, if I miss anything. Boomer economy where the aging population has a disproportionate amount of their income tied up in their home. Yeah, I understand that, but don't you think that's going to happen in the future? Like, I get this whole idea that boomers are going to pass away and there's going to be a flood of inventory. I don't want to get into that right now because there's way too much data that debunks that myth. But I guess what I'm saying is, like, everybody gets older, right? Like, everyone gets older. So, like, I'm Gen X. I have a lot of my, I guess, money tied up in real estate. I'm not a boomer. I know a lot of millennials who have a lot of real estate too. So, like, won't that just happen as home prices rise and as people buy homes and buy investment properties? Won't they have more and more wealth tied up in real estate? I don't know. I kind of think, like, at some point, millennials will get their turn and they'll buy a bunch of real estate. And Gen X will have their turn and buy a bunch of real estate. And we are buying a bunch of real estate. So I don't know. It's like, it's a strange topic to me. But that's just me. What's up, Nathan? Thanks for the help. Are you taking new clients? Yeah, sure I am, depending on where you are. I can either refer you to somebody or I can work with you directly. Just depends on where you want to buy. So you can hit me up on my you can look me up, sorry, on Google You can find me on Google, and I've got my contact information there, or it's usually in these descriptions. Once I'm done with this video, you'll see it. Or if you look back at a past video, you'll see my contact information. That's really all I wanted to say. TH2. Delaware County has been reducing property tax from what I've read. They have? That's news to me. And by the way, I looked it up. I can't find one state, not that you're saying this, TH2, but I can't find one state where property taxes are abolished. I've had people tell me, well, you should do what Florida's doing. I'm like, but yeah, they're still paying property tax. I mean, DeSantis is like, hey, we're going to get rid of them. It hasn't happened yet. So I haven't found anywhere I mean, there's probably counties or cities across the country where there are property taxes that are lower or they don't pay them, but I don't know about a statewide initiative that's passed. I know Texas is working on it, but that one's complicated. I mean, they want to like put people in cuffs, handcuffs. It just seems so complicated in Texas what Real Estate Mindset's doing that I think that's one of the reasons why they're struggling, because people are like, what? Ohio's is very simple. Sign the petition, get it on the ballot. Ohioans decide yes or no. That's all it is. And then my guess is if they say no, it'll be on the ballot again. That's kind of what I think will happen. I like deflation, cheaper gas, cheaper food, cheaper housing. In reality, what's expensive today be considered cheap tomorrow. Right. Yeah, I think a lot of people want deflation in the housing market. I mean, there were going to be pockets where prices come down probably, but I don't see, I don't think, well, who knows what will happen, but the administration will do everything they can to keep prices higher for longer. I just think they will. And they'll just kick the can down the road, let the next person deal with it. I don't think they will. Seems like the trend has been a lot of boomer real estate has been trickling up to the BlackRock and other management funds. It's a de facto retirement fund for a lot of people. Okay. Yeah. So look, I'm going to jump into the housing market here because I could banter with you all day long, which is cool because I like it. But let's look at some data. And to your point, Andrew, I'm just looking at this comment. Yeah, to your point, Andrew, I understand what you're saying, that there are a lot of hedge funds buying real estate. But did you know that, in fact, let me just bring this up. Sorry, you threw me off my game here because you asked a great question or you had a great comment. Let me show you this. I just did a video on this topic. This is crazy. I'm just going to use Resi Club's website, which if you're not using Resi Club, you're not subscribed to their free newsletter, you should be, because they have the best real estate information, bar none. This guy's actually from Cincinnati, right here. So this is the share of rental, single family rentals, and who owns them in the U.S. In other words, if I look at all the rental properties in the U.S., how are they broken out with ownership? Now, a lot of people think, and rightly so, I understand, because there's a lot of propaganda on YouTube, that hedge funds, BlackRock, Blackstone, Blackbeard, whoever it is, owns a ton of single family homes. And they're right. Big hedge funds own a lot. And they talk about, this article basically says if you own over 1,000 single family houses, you're considered an institutional landlord, a big landlord, right? The shocking part is that the landlords that own 90% of all the single family rentals in the United States own 1 to 5 properties. They're mom and pop landlords. 90%. So, I mean, it's insane. 90% of all the rentals are owned by people like you and people like me. Mom and pop landlords, not big investors. In fact, if you look at this pie chart, 1.6% of all rentals are owned by companies that own over 1,000 houses. So it's not necessarily the hedge funds and the big companies like BlackRock, Blackstone, whoever, that are buying these homes. But make no mistake, they do own a lot, like Invitation Homes, which is partly owned by Blackstone, I believe, like they own like 20% of the company, I think. They have like 80,000 single family rentals that they own, like 80, 85,000, something like that. So these companies own a lot of rentals, but when you look at the total stock of the US and you kind of take a 50,000 foot view, it's only 1.6% of all the inventory out there. So the majority of people that actually own rentals a lot of them are accidental landlords, people that, their parents leave them a house. They have a divorce and they don't know, they don't know what to do with the house, or they decide, hey, we're just going to keep it and use it as a rental because they can't, come up with a way to split up the money. That happens all the time. And so I just think it's important to remember who owns all the rentals. They're just normal people. It's not as corrupt as I think a lot of people want to make it into. So you're right. A lot of people use it as a retirement, and I know I will. That's what I will do. And I wasn't given the houses by any means. I've worked to get them. And I don't own a lot of single family rentals. I'm only just a couple. Most of my inventory, they're duplexes, triplexes, and quads. All right, let's get to this data now. You guys have me on a tangent. That's okay. All right, so let's just look at Columbus for a second. So we got active inventory in Columbus. By the way, if you have a metro you want me to look at or a county, put it in the comments below, and I will get to it. So you've got basically inventory is elevated in Columbus, but it's falling. You can see that it's starting to come down, although we do have more homes for sale. And that's why we're seeing home prices kind of soften in Columbus, no doubt. Let's now look at median sale price. So median sale price, check this out. We are only up in Columbus, well, basically flat as far as median sale price. So prices overall are about as expensive as they were this time last year. That's a good thing. Like, at least it's not going up and up and up. Like earlier in the year, look at this. We were up 4% here. We were up 4% here, 5% here. So prices, I'm noticing they are overall starting to come down. It's not the same in every location. Like in Plain City, if you have a great house on the market in Plain City and it's priced right, probably going to move. Probably more expensive than last year. But if you're flipping a home in Franklinton right now, you better watch out. In Columbus, and people from Columbus know where that is. So if you're flipping a home in the Hilltop, in Franklinton, in Linden, in inside of the Columbus metro area, inside of the Cleveland metro area, the Cincinnati metro area, the Dayton metro area, and you bought a house that was built in 1900 and now you put, $100,000 into it, you better have that place dialed in and it better be priced right. And if it's not, even if it is priced right, it may sit a while. That's where I'm seeing all the inventory come into the market, are those older homes that have now been flipped. And I've talked to a lot of flippers lately who have told me that their inventory is sitting. They are not moving their houses near as fast as they were last year or the year before, and they're having to take serious discounts. Some of them are taking losses. So that could be a great opportunity for somebody that wants to buy their first home, even buy their first rental. You got to be careful. You got to do your inspections, but I'm seeing those flips sit. And I think that's where we're going to see the most pain. Investors that paid way too much for houses and priced them way too high. They'll get punished. All right. So median sale price coming down in Columbus. Now let's go over to, now let's look at this. Let's look at, Franklin County. Look at this, median sale price in Franklin County, not Columbus. Franklin County as a whole. Look at that. I mean, it's $314,000. We peaked this year at $344,000, but it's falling. I mean, it's only up 1% year over year. I know it sounds like, well, housing nerd, why does that even matter? But if you look back at the previous years, like look Look, this time last year, we were up 4% year over year. And in 2023, we were up 5% right now. And look at this. We were up 7%. 7% in 2022 from 2021. So the price growth is compressing. And if you're waiting on lower prices, that's a good thing. Although I'm not saying prices are crashing necessarily. I'm just saying the growth is slowing to a crawl. If we continue to gain inventory, if interest rates stay down, you'll probably see further erosion of the price growth. If we lose inventory, if demand comes running back in the housing market because of lower interest rates, that will be a problem for prices going up, not going down. I mean, look at active listings in Franklin County. They're up 18%. Again, where is all the inventory though? Check this out. So this is a graph that I built in Data Wrapper using the MLS, the Columbus Multiple Listing Service. And this is all the active inventory by price tier. So if I look at all the homes on the market, where is all the inventory at? Well, it's easy to see. It's between 200 and 400 grand. That's where all the inventory stacked up at right now. I thought this was interesting because only 16% of the homes for sale are priced under 200 grand. My assumption is a lot of these priced under 200 grand need 200 grand in work. I think that's what you would see if you looked at the details of it. And I think a lot of these $200 to $400,000 homes are priced. They're flips. I think a lot of them are flips. And then you do have a good amount of inventory also in that 400 to 600 range. Like the typical suburban home in Columbus right now, if it's not priced well and not priced right, buyers aren't fooled. It's not COVID. People aren't paying anything you're asking. So I think a lot of times houses in this price range could sit potentially if they're not priced right. I was surprised there was not more weight given. There wasn't more share of the homes priced between 6 and 8 and 800 plus. I was surprised. I thought there would be more inventory stacked up here in the upper price range. I have seen a lot of houses on the market though, priced over $1 million that aren't moving because they're priced way too high. They just are. Anyway, I thought this was interesting. Like, this is just like it's really just Central Ohio. That's what this represents. It's not the entire state. I don't have that MLS data. But because I have the MLS in Columbus, I can look at this. Otherwise, wouldn't be able to see it. And that's the kind of the problem with the Redfin data. But we play the hand we're dealt. So anyway, when I look at all those listings, and we look at the fact that we're up 18%, that basically means, hey, there are, a good chance 40% of those homes are priced between 200 and 400 grand. And a lot of the cheaper homes need 200 grand in work, right? Like roof, foundation, windows, wiring, plumbing, everything except the skeleton. All right. So that's active listings. We looked at median sale price in Franklin County. Let's go to, I'm just going to buzz through the major markets in Ohio, and then I'll take your request, obviously. So active listings in Cleveland, up 8.38%. So inventory actually started to fall a few weeks ago in Cleveland. I think because, there was an explosion of inventory. People actually were they're actually buying something. Let me look at one thing I didn't do in Franklin County, but I can do it here. I'm looking at homes sold. What's the sales volume in Cleveland? Up 5.2%. So we have more people listing homes. More people buying homes in Cleveland versus last year. Let me look at new listings. How's that doing? Look at new listings, up 8.7%. Up 8.7%. So you've got more listings, right? More people putting their home on the market, and you got more people buying homes in Cleveland. And this is the metro area, not necessarily Cuyahoga County. We'll do that in a second. And then they're different. It's different when you look at the county level. All right, let's look at median sale price. What's that doing? 247 grand. Now, every year it drops in the winter. Prices do drop, or the median sale price drops. It's just how seasonality is. But Cleveland's still up 8% year over year, right? 7% year over year in the median sale price. So homes, the typical home in Cleveland is 7% more expensive than last year. But I'm betting there's a lot of, burnout houses, 200K rehabs sitting inside the city. All right, let's look at Cuyahoga County now. Let me do active listings. So in Cuyahoga County, you've got 8.25% more homes on the market, 3,643. But again, that's starting to kind of drop, different than Franklin County, where it seems like it's still going up. Let's look at median sale price in Cuyahoga County. Yeah, up 7%, $221,000. And look at this. They peaked at 248 grand. At that time, you're up 13%, 14%. I'm sorry, 13%. Yeah. And it's been elevated all year in Cuyahoga County. Like, Cleveland continues to go up in home prices at a pretty high rate. Now, the difference is, look at the median sale price, 248. Or, well, that was back in the summer, 221. Significantly less than Columbus. I mean, Franklin County is over 300 and Columbus is what, 350. That's a big difference. So to somebody's point earlier, I think was it Nick who said this earlier? Homes are cheap here compared to other areas of the U.S. All right, let's look at Cincinnati. I'll look at, let me just do this. New listings in Cincinnati. What do we got? Up 6%. More people putting their homes on the market. I mean, that's a 4-year high for this time of year. That's good if you're looking for a house in Cincinnati. And this is the metro area of Cincinnati. Now let's look at active inventory. Active inventory. Yeah, look at this. This is strange. Only up 5.5% in Cincinnati. So not that many more listings on the market compared to last year. I mean, there's some, but it's not, 17%, 20% like it is in Columbus. Let's look at median sale price. Median sale price in Cincinnati, $305,000. So less expensive than Columbus, but more expensive than Cleveland. That's up, though, 4%. I'm seeing a lot more pain in Central Ohio than I am in Cincinnati and Cleveland from a price standpoint, no doubt. All right, let's look at county level now. Let me do Hamilton. And if you have a metro you want me to look at, or a county, put in the comments below. Hit the like button when you come on here, by the way. Don't be a freeloader. Don't be a freeloader. That's the only thing I ask. Just hit the like button and make a comment. Tell me what's going on in your market. All right, let's look at actives. Let me just skip the actives here. In Hamilton County. Yeah, up 8%. More people putting their homes on the market in Hamilton. Median sale price in the county, $280,000, up 5%. Up 5%. So the county is what, 15,000 less with the median sale price than Cincinnati is? All right. What about homes sold? How'd that do? Look at home sales, down 5% in Hamilton County. So 5% fewer people buying homes. That's going to cause active listings to go up if new listings continue to rise, right? Because you put more homes on the market, you're not buying as many, supply goes up. But man, we are way off from like historical averages with inventory. Like we're not even close to like what we would see back in, well, I'll show you right here. Watch this. This is their monthly data. It's a different look. And sorry if I'm confusing you, because it's easy to get confused with this stuff. But look at inventory of homes for sale in Ohio. Look at this. This will blow you away, blow your mind. So right now in the whole state, we've got 30,379 active homes at the end of August, according to Redfin. Look historically where we were with inventory. Look at this. I mean, back in August of 2012, we had 70,000 homes. 70,000. Now we've got 30,000. I mean, we don't have any. I mean, even though when you see the uptick of 17%, 20% of rise in inventory year over year for Columbus, it's like, oh, that's good, but it's not even close to what we had way back when. And this is only going back to 2012. If you went back to 2005, 6, 7, 8, 9, 10, this would be even more elevated. Like I'm guessing there were well over 100,000 active homes on the market back during 2010 or so, when you had the height of inventory during the Great Financial Crisis. So since the Great Financial Crisis, inventory continued to fall. It just fell and fell way before COVID. Now, COVID didn't help. There's like the COVID mark right there, March 2020 or so. You can see what happened to inventory. It went way down. And now we're just starting to climb out of it. So the point is, until inventory spikes exponentially, by the way, they have to be houses people want to buy. So if it's a house that needs $200,000 in work that was built in 1900, unless it's priced at $50,000 or it's a fire sale, people are not going to probably snatch it up if there's a ton of inventory. So you just need a lot more homes on the market to cause any type of price pain. It's just about inventory. It really is. And if we saw like mass economic pain throughout the U.S., massive job loss, whatever else happens, big credit defaults or something like Lehman Brothers or Bear Stearns back in the day, then you will see it in the inventory of homes for sale. That's where you'll see the pain, because people will list their homes instead of keeping them. Like if I got into a financial bind where I was like, man, like I got to come up with like a lot of money really quick and I don't have it liquid, I may very well sell a property and put it on the market. And I would put it on the market to a point that it would sell. I wouldn't keep it. I wouldn't take it off the market. And right now, there's just not a lot of pain. I know that's not what a lot of people want to hear, but that's the truth. There's some pain, nothing like you had during the GFC, obviously. I mean, look at the inventory we had. Crazy. All right, go back up here and we'll look at some more data by county and metro. Did I lose everybody? Nope, got 34 people on. Please hit the like button. I can't tell how many people did. But let me go back and look at some comments, see if anybody has an area they want me to review. What's up, Charles? One major complication with eliminating property taxes is that most of police and fire department funding is from property tax. Understood, agree. So I should have said this. I'm really sorry I didn't. I apologize. I love my township services, my village services here in Granville. I love the schools. My kid gets an excellent education. I've got many friends that are firefighters. I got many friends that are police officers. I want to fund them 100%. I would rather get a bill in the mail for those services or increase my sales tax, even increase my income tax, but don't tax me on an unrealized gain on a property. That's my problem, Charles. That's where I look at it and go, well, no one in their right mind, no Gen Z or millennial would ever stand for their Bitcoin to be taxed on an unrealized gain. Like you bought Bitcoin back in, let's say 5 years ago, and it was 50 grand a coin. Now it's 120 grand a coin today. Well, you don't get taxed on that difference unless you sell it, right? Well, on a property, you are taxed on an unrealized gain. And to me, that's the problem. And if you're a senior citizen or on fixed income, or even a landlord, you are somehow absorbing that burden. And as a landlord, I'm passing that on to a tenant purely because the taxes went up and I didn't do anything to the building. So that's the problem I have. If somebody sent me a bill in the mail, like a utility bill, and said, "Here, Jason, here's your school bill for the year for your kid," I'd be like, "All right, okay, that's fine." But what I don't want is to be taxed on an unrealized gain. I think that's what most people have a problem with. But make no mistake, I want all those services to be funded. Libraries, zoos. I like the zoo. I love libraries. I just don't want it tied to an unrealized gain on my property. So the revenue has to be replaced, but the senior citizen who now didn't do anything to their property, didn't improve it at all, and now they have to pay double tax. It's like, why? If it was sales tax, in my opinion, the way I look at it is if the senior citizen's on a fixed income, they don't buy a new iPad, a new computer, a new car, a new gizmo, they don't go to Starbucks, they're not paying as much sales tax. So it doesn't affect them as much. If they're on a low income, they're not paying as much sales tax because they're not buying as much stuff. But if you are a business and you're buying like raw materials, lumber, windows, flooring, all that's going to be taxed. And that's how the coffers will be filled. Anyway, that's how I look at it. I'd just rather pay higher sales tax. Even a higher income tax would be fine. So sorry, I should have mentioned that earlier. Lake County. All right, let's do it. Lake County. What's up, Phil? Yeah, Lake County is actually where Beth Blackmar lives. And she's one of the folks who I interviewed for abolishing property tax. She lives in Lake County. Lake County, Ohio. A lot of people want to know about Lake County. New listings in Lake County. What's going on? Look at that. Up 20%. Good. You got 20% more new listings, but it's 79.5 new listings. So like last year it was 66. So another, 13 listings? Ain't that much. But it's better than it's better than new listings going down. That's for sure. Let's see. Let's do home sold real quick there. How are sales going? Up 2.7%, sold 66 homes. So here's the deal. You sold 66 homes. And this, by the way, this is a 4-week rolling average. That's how they look at this. They are looking at they're looking at that 4 weeks, over the last 4 weeks, and then telling you weekly how many homes are sold. So that's how they kind of calculate this. So if you sold 66 homes and we only put on the market 79 homes, that means 13 homes theoretically stuck to inventory. That's how you can kind of look at that. But it doesn't look like you usually have a lot of homes for sale. So 13 more homes may really help actually. Let's see. Let's do actives. Let's see how that's doing. Active homes for sale. Active homes, 8.6% up year over year in active inventory. So you do have more. You got 575 homes. Last year you had 529 homes. So another 50 homes or so? Not bad. At least it's not declining. Let's do median sale price. What's that doing in Lake County? We're actually down year over year. Look at that, down 2% in Lake County, Ohio. You actually peaked last year. The highest you had was $256,000. And since then, it's kind of hung out sideways, but I wouldn't look too much into this up and down thing because you don't have that many transactions. But it's not skyrocketing anymore. Let me look at the trend. This is an interesting thing we can look at. I don't know if this will tell us or not. This graph here shows us the trend of home price growth. It's not measuring the actual raw number it's not measuring the sale prices necessarily. It's just measuring how much it's up or down year over year. And so, for instance, like at the beginning of the year, you were up 1% in home values. Now you're up, I'm sorry, now you're down 2%. And if we look at this graph and this line, you can see it's kind of still trending overall up, but it's not going straight up anymore. Yeah, so it looks like you do just need more, more inventory is better. Let's look at what do we got? Look at average sale to list price ratio. This kind of tells us what buyers are paying versus what sellers are charging. So in Lake County, buyers are paying about 99% of what sellers are asking on the final list price. So that means getting about 1% discount. That doesn't mean you have to get a 1% discount. You could probably make a lower offer, but it's not 100% anymore. Look at this. Back in 2022, it was 103%. So you think, well, 103% versus 99%, it's a 4% difference, but that's a big difference on a $200,000 house, $8,000. So people are not paying more than asking anymore. They're paying under asking. This is good. They should, right? I mean, that's how it should be. I mean, sellers have been winning for so long now. And they can still win. You can still win as a seller. It's just not egregious anymore. All right. That was good. Thanks for asking about Lake County. And thanks for joining, Phil. I appreciate it. Appreciate the support. Ooh, Lorain County. Yep. Razor Stylist. Cool name. Thanks for joining. Yep, we'll do that one right now. Lorain. Got a lot of Cleveland folks on here. And yeah, I type like an old man. I do. My kid makes fun of me all the time. New listings in Lorain County. How's that doing? Up 11%. So 11% more people putting their homes on the market versus last year. 90 new listings hit the market in the last week. Now, if I look at homes sold, how's that doing? Are people buying homes there? Yeah, they're buying homes too. That's up 14%. So you added 90 homes, sold 81, basically like 9 homes, that sat on the market or were added to the market. As you go back in time here, you can see that there were a lot. And this is the weird thing, like during the selling season, there wasn't an explosion necessarily in a lot of areas of people buying homes. Now they seem to be, I am seeing more home sales in a lot of markets. It's not an explosion, but like Lorain County, a lot of areas are up in the number of people buying homes because as more inventory enters the market, there are more choices for buyers. A lot of the reasons why people aren't buying homes right now is because there's not a lot on the market. Not a lot of good homes anyway. But people are still buying homes. Let me look at active inventory. Active homes for sale. 752. That's up 10%. Good. And last year you had 683. So you are building inventory. Median sale price. How's that doing? What are prices doing? Up 7%. I mean, that's definitely up. I mean, if you look at this trend, you see you started at $250,000 and you're at $271,000. And if you just drew a line, right? If I just drew a line through this, I would see that it's angled upwards, right? It's not angled down. So that home price growth in a lot of markets of Ohio is compressing, but in an area like Lorain County, it looks like it's still going up. Usually at this time of year, prices fall. So it'll be interesting to see as we go through the next few months if prices do fall there, or they end up higher than last year. I'm not going to be shocked if they end up higher. But at a medium house price at $271,000. I mean, that may be why prices continue to go up, because people are like, oh, it's still 271. It's not 500, not 800 grand, right? Yeah, Ohio's like, unless we build a lot of homes or magically a being comes from outer space and gives us a bunch of inventory, I think prices are going to remain relatively sticky for a while and continue to probably go up overall. Hopefully they don't skyrocket. We'll see. I told you. Uh-oh. I don't know what that means. Tuscarawas County. Yep. Let's look at it. Thanks, Nick. Let's take a look at Tuscarawas County. Let's look at new listings. See what we can find out. New listings in Tuscarawas County, a whopping 21 hit the market. Let me do a 12-week average. This will maybe smooth it out a little bit. Yeah, this helps a little bit. So you had 20 new listings hit the market, 21 new listings. That's down 9% year over year. It's pretty much where it was the last few years. I mean, give or take a few units. Nothing incredibly impressive there. Not a lot of homes hitting the market in the last week at all. Let's do sold, homes sold. How many sold? Down 10%. Fewer people are buying homes. So you sold 16 listings. You added 20 listings, a little bit of growth in inventory, hopefully, but not an amazing amount. Just kind of sluggish, right? Active inventory, how's that doing? Up, I mean, basically you're flat. You're dang near flat. I mean, up 0.05%. What are you, difference of 1 unit, 4 units? I mean, it's really strange. Look at this. I mean, every year meets in this time of year, you have like kind of this intersection. And you go up right here, and then maybe you'll come back down. I mean, at one time you had a lot more inventory. You had 143 homes on the market, and that was a 15% growth versus 124. So you had another 25 homes, which looks like a lot when you only have 143 homes. So there was definitely an elevated inventory here compared to the previous year. But as we've gone on, you can see last year you grew inventory really fast at the end of the year. I mean, it went up a lot. Like, look at this. You were at 132, and it ended up in November at 184. So last year you grew inventory a lot. It'll be interesting to see if that trajectory follows. You know, this year, if the same thing happens. Yeah, you just need more homes. Just got to have more homes. Like, I'm just curious here. I don't know what I'm going to find, but let me look at historical average and just see what we find out. Yeah, look at this. I mean, look where you are. Like 150 at the end of August is how many homes you had for sale. Look where it came from. I mean, back in 2012, you had 454 homes for sale. 4 times the amount. Nearly 4 times, right? A lot more homes. I guess it'd be a little more like 3 times the amount. But nonetheless, inventory fell and fell and fell. And so one of the things I really would encourage you to think about, this goes for anybody listening who's in Ohio, is if you're driving around and you see these housing developments and you think, I can't believe they're building more houses. I can't believe they're turning that cornfield into a housing development. Like they just broke ground on a 300 unit housing development in Grove City. I'm doing a video on that. And like, there's a couple housing developments here in Newark that they're putting up. It's like a drop in the bucket. I mean, people who say we don't need new houses and that we're oversupplied on homes, they are not being realistic. Because if we had a ton of inventory, y'all would be finding deals left and right. There'd be enough housing. It wouldn't be a big deal. But the problem is we don't. We don't have enough housing. I mean, and when I say we don't have enough housing, we don't have enough houses that are houses you can live in. Like if you count all the houses that are burnt out, all the houses that are abandoned, like the 1900s farmhouse that's sitting, with weeds growing around the outside. You guys have seen those all over Ohio. I see them all the time. I tried to buy some of them, and they need either torn down or they need 300,000 in work. Something stupid, right? That doesn't make sense. So this county is just a great snapshot. Tuscarawas County is any town USA, right? There's thousands of counties throughout the US that are like this, where inventory has fallen and fallen and fallen. Mainly, one of the reasons is because there's a ton of old homes, and those old homes get demolished. They are forgotten about. And so, and if we're not building new homes and replacing the inventory, what's going to happen? Not going to have enough housing. Regardless of what boomers do, regardless of what hedge funds do, regardless of what investors do, because we can't control that. Builders need to build more housing in Ohio and in many areas of the US. Now, if you go to an area like Houston, they've got I looked yesterday, they have like 40,000 homes on the market in Houston. I think they're at near an all-time high of inventory. Looks completely different than this. This graph is completely different. It's all way up here right now compared to back in the day. So they have a lot more homes on the market than they did during the GFC, whereas in Ohio and a lot of other markets through the US, it's fallen. So the next time you hear somebody say it's the housing shortage narrative is a myth because realtors want you to think that you should buy a house. No, just look at the information. Just look at it. Just need more housing. We do. Wow, that was really eye-opening. I mean, the inventory in Tuscarawas County is not good. Not good. But that's what I'm seeing on the charts. You guys let me know what you're seeing on the ground. Bad time to deploy capital. Major economic downturn is soon upon us. Okay. I mean, isn't there always unrest in the economy? It's either bird flu or it's COVID or it's a war or it's an election year or it's a primary year or it's the national debt crisis or it's whatever, right? I mean, there's always an economic and a political uncertainty. Like I can't remember when there hasn't been an uncertainty. I'm certain that I don't remember a time when there was not an uncertainty. But I understand. It's America. You can do anything you want with your money, man. So I'm not telling you should deploy it into real estate. And there's a lot of other things to deploy it into, or keep it in a money market. They're still growing at like 3.5% or something, right? I'm not a financial advisor, by the way. So you should seek help with a financial advisor. I have to say that as a disclaimer. Can I look at 45245, just east of Cincy? 45245. Yeah. Let me bring that up. It'll just take me a second here. This website's not cooperating. Okay. All right. This is a zip code look. I don't use this on every live, but you asked, and I'm feeling generous this morning. So let's see. So this breaks it down by zip code. This is not a graph look, and this is using Zillow data. Not that matters really, but you said 45245. All right, hang on. Let's look at it. east of Cincinnati, 45425. There's 45244. Right there. Got it. Haha. All right. So they're saying the 1 year shift, you're up 4.1% in home prices in 45245. I don't have the inventory shift for that zip. Actually, that's not true. I do. And so with Resi Club, by the way, you can subscribe to their newsletter. They'll send you something almost every other day. They have a new article out. A lot of them are free. Every month, Lance from Resi Club puts out, and he's from the Cincinnati market. I may have mentioned that, but he puts out a complete update on the housing market monthly. And these are the maps he puts out. Now you have to have a premium subscription to access this info. I do, and I have permission to share it as long as I give him credit for it. But he puts out two different maps. One is prices and one is inventory. And so if you really want to nerd out, you can, I mean, this info is fantastic. Now I got to go in and see if I can find that zip code again. Oh, that was it, right? 45425. I got it. 45425. Look at this. Year over year change in inventory, 27%. So over the last year, inventory in that zip code, right? I just want to make sure I have the right one. 45245. Did I get it? Yeah, I did. Good. So, so the year over year change in inventory is up almost 30%. So you've got 27.6% more homes for sale than you did this time last year. This number is really important, though. The shift from August of 2019 to August of 2025, you're down 24%, meaning you have 24%, almost 25% fewer homes on the market than you did pre-pandemic. So if I could look at a chart, right, different than just looking at a number, I could see that before the pandemic, I probably had a lot more inventory, and it's fallen and it's recovering, but I'm not there yet back to pre-pandemic. In fact, look, 37 homes on the market now at the end of August. Back pre-pandemic, you had 49 homes. At one point, you only had 12 homes for sale. So that's how that looks. But prices are up there when I look at zip code level. And by the way, if I just look at a map, you can, these are prices, right? I can see where all the price pain is in an area, like in Columbus, inside the city, like 43211 down 1.5%. In Cincinnati, like 45223 down 2.7%. And in Cleveland, same story holds, like 44113 up in Cleveland, down 3.7%. I mean, we're not seeing that decrease in some other areas, right? Like, I don't know, up in Cleveland, 44140 up 6.6%. What do y'all think? Do you like this map view better? Do you like the chart view better? I get opinions both ways, but hopefully this kind of helps. Hopefully that helped, Dane. I appreciate you joining. What's the impact of Zoomer memes on Ohio's housing market? No one wants to live in the state with LaRiz. I have no idea what you're talking about, man. Zoomer memes. I think I kind of understand what you're saying, but I'm just a stupid Gen X guy. I don't know. I guess if you pay attention to that stuff, maybe it'll make an impact. That was a question I can answer. Summit County. Yeah, I can do that. I have to ask my kid about that, about what you're talking about, because I'm lost. Summit. Yeah, I looked at this one yesterday. So let's do new listings in Summit County, up 6.8%. So you're adding more new listings. And here's the weird thing is that typically new listings are added early in the year, like spring selling season, people are putting their homes on the market. And they were, right? I mean, they were up 10% here, 11%, 8%, but it's stayed elevated all year. And now it's starting to curve upwards, which would be weird for this time of year. Typically, you're seeing new listings actually drop right now, but they're going up in Summit County. Now let's look at homes sold. How many homes are actually selling? 12% more homes sold. People are buying homes, putting homes on the market. That's good for that inventory to churn. Normally, that will help prices stabilize. If you've got more and more people putting their home on the market and more people buying, there's price discovery, right? Instead of nobody buying, nobody selling. Then the price just stays locked in and sticky. I mean, look at this. You're up 12% in active listings in Summit County. You've got 1,403. Last year, you had 1,271. So another 130 listings. All right. You should have more. And by the way, if there's something specific that y'all want to see for one of your counties, like I don't review all these metrics. Like I don't look at days on market. I don't look at the weeks of supply. I don't look at median list price. I don't look at any of that. So because it would take too long. So if you have something you want to know about, there's like, hey, I'd like to know about this in the county regarding the housing market, definitely ask. Let's do price. Yeah, look at the median sale price. Not at an all-time high, but dang close to it. $239,000, up 3%. It's kind of just hanging out here. It's starting to curve down, but every year it falls in the winter. That in the fall time it falls. But you've been elevated all year. At one point you were up 8%. That actually looks like, is that the all-time high? 243, 243. Wow, you've been like 242, 243 for weeks now in Summit County. And that's the Akron area, right? Okay. So hopefully that helped. Looks like prices aren't really falling that much. Inventory has built somewhat. But again, if we go down here, not to rub salt in the wounds, but if I go down here to this chart, yeah, I mean, look where you came. I mean, inventory there. It's crazy. It's absolutely crazy. At one point, you had 4,159 homes. I'm sorry, about 4,000 homes back in 2012. Now, 1,179. It's nuts. I mean, every county in Ohio looks like this, pretty much, with few exceptions. I mean, you really haven't grown from COVID that much. I mean, like let's look back during COVID. Yeah, look, August of 2022, you had 1,143 homes. Now you've got 1,179 homes. Barely growth since 2022. And that's keeping those prices high because there's just not enough things for sale, not enough stuff on the shelf. At some point, maybe we'll see more inventory. I don't know when that'll be. Need more new homes. I mean, that's really the only way to solve it. I can't think of another way. I mean, the old homes they're getting older. They are, right? Clermont County, yes. We'll take a look at Clermont County. Well, since I'm here, I might as well look at this. I always misspell this. Clermont County. We'll look at inventory there. It's probably going to look the same. I mean, yeah, it does. Like, you've got 582 homes on the market now. Back in the day, 1,399. So another 900 homes is what you had, right? And that's a lot when you only have 1,000. You're just not getting that inventory. It's crazy how the inventory just fell before COVID. I mean, this would have been the time to buy a house. Not that you can go back in time, but if you could, that's when buying a house would make sense, right? Because there's a lot more homes on the market. Now let me go up to the top here to get a better look. So we looked at inventory already. We can look at median sale price now. Yeah, I mean, median sale price, $317,000 for Akron. Wow. That's for the whole county, obviously, not just Akron. But it hasn't crashed whatsoever. Although the price growth isn't insane. I mean, if I look in, like, at one point you were up. Come on. At one point you were up 5%, right, at $312,000. Then you hit $331,000, up 6%. Now you're at $317,000, up 2%. So you're not up at least 10, 15%, which was happening. I mean, look at this. Back in 2023, you were at 301,000, and that was up 12% year over year. So hopefully the growth is moderating to some normal level. 2% a year is normal. 3% a year is normal. 10% a year is not normal. So that's Clermont County. Hopefully that helped. Thanks for suggesting it. Did Summit. Oh, somebody wanted Akron, Copley, Medina area pricing and inventory. Let me think about the best way to do that. Let's do this. Let's look at. Let me go down and use this. Akron. So we'll do Akron metro area first. And I'm using the monthly data down here because some of these smaller areas, smaller metros anyway, because you also wanted, Christine, by the way, thanks for always joining. I appreciate it. Like Copley, Medina, I'm guessing those are metros or towns or cities. It just may give us a better look with this monthly data. So Akron, when it comes to the number of homes for sale, same thing, 1,465, right? And that's included in that county, Clermont County we just looked at, right? Same thing, just had a lot of inventory back in the day. We know that, can't go back in time, so can't dwell on it too much. But let's look at new listings, 995 new listings. And that's up 4.5%. So you are adding some inventory. Let me look at the inventory year over year and see what that's doing. Up 7% in Akron. Not amazing. Could be a lot more. I mean, look, inventory's been falling. You can see this is the year over year change of active homes on the market. I mean, virtually every month has been down, meaning every month inventory continued to drop and drop and drop, going all the way back through 2012, 13, 14, 15. I mean, at one point, look at this. You were down 50% year over year in February of 2021. A lot of reason because of COVID. The COVID insanity of home prices, which I get in an area like Austin, Texas, or Boise, Idaho, or Kalispell, Montana. But I don't, for the life of me, understand why inventory dropped so much and prices went up so much during COVID for places like Akron, Ohio. No offense for Akron, but like people decided that they had to buy homes everywhere, I guess. I blame a lot of it on Instagram. Let's look at prices. How did median sale price do there in Akron? You're down 0.8% in August. Let's see the value, how it's trended. $245,000 in median sale price in Akron. Now, let's do Copley. You asked for Copley, right? Oh, I think it's too small. Let me go down here to this place. It's not in here. Is that a county? Copley, huh? Copley. Well, not on my list here. C-O-P-L. I got Copley. Let me do this. Metro, get rid of that. Maybe this will help. No, I don't have it. I don't have that one. Huh. It usually has most of the small towns are even on here usually. Let me look at Medina. Sorry about that. Medina. Here we go. All right, home prices there, $308,000. All right, let's look at inventory. Same kind of trend, 39 homes on the market right now. New listings, 36. Home sales, how are they doing? 40. You had more homes sell than you did hit the market. That's not what you want to see if you want more inventory. I mean, it's been bad ever since, really, since COVID. It's not been great inventory, and it hasn't really increased that much in Medina. I mean, it's just anemic, the number of homes for sale. And again, just like all the other areas of our state, you had a lot more homes for sale back in 2012, but people started buying homes in 2013, 14, 15, 16, and it just kept going. I mean, I really don't see if you're in an area like Medina, Akron, it looks like you're going to have to be really, really patient to find an opportunity where you're going to pay, if you're wanting to pay like 200, well, let's find out what the price is. Let's look at that. So if you wanted to pay, let's pretend your budget's like 250 and houses are all 308 grand. Well, you're going to have to either adjust your wants, and you're going to have to be patient. You're going to have to look off market. You're going to have to make a lot of offers, and you're going to have to make disrespectful offers. Like you're going to have to go into a situation where you say, look, I may have to make 50 offers in order to find my opportunity. And it's possible. It is possible. I have to like look at expired listings is another great way to do it. But when a market has no growth of inventory, it's very hard to find an opportunity that makes sense. Or you have to go somewhere else, right? You have to move somewhere where there's a lot more inventory. I will say, not that you should leave Ohio at all, but there are a lot of areas of the U.S. right now that are hurting because they've got a ton of houses for sale, a lot of new construction. Like even like Indianapolis has a lot of new construction right now. Not to say you want to buy a new home, but there could be a deal there, depending on what your wants and needs are. But thanks for suggesting that. I would never buy in Ohio. Property tax is ridiculous. They are high. 8th most expensive in the country. Ranked 8th. Yeah. People are hurting with property tax here. No doubt about it. And again, I don't mind paying for the schools. I don't mind paying for the services, but I just don't tax me on the unrealized gain. Unrealized gains cripple small farms too, which we desperately need more of. Yep. Actually, I just finished shooting a video, Andrew, about farmland in Ohio and how big companies like Microsoft, Amazon, Google, Intel, Anduril, that drone facility down in Pickaway County. All those folks are piling into Ohio because land's cheap, water's cheap, electricity's cheap. At least it is right now. And that's not helping property taxes, and that's taking away Ohio farmland. So, and housing developments will too, although you got to have new houses. So it's a catch-22, but definitely need our farmers. I would agree. I have a family member looking to sell in Grandview Heights. Inventory seems low. Demand seems high. In the area, I know winter season is suboptimal for listing. Better to wait for spring. I would say, well, I never look at Grandview. So let's look at Grandview Heights. Is this? Yeah. I would say if they price it right with their house, it depends what their goals are. But if they price it right and they do the comp work, like they really understand their subdivision and what's been happening there with home prices and inventory, I think you can be successful in any time, especially if there's low inventory, which there may be. But let's look. Let me see. What zip did you say? 4, 3, 2. Look at that. Can you believe I landed right on that? 4, 3, 2, 1, 2. Man, I'm good. Prices are up 2.5% year over year. Yeah, typical home value. Grandview is pretty expensive, $440,000. So home prices are going up there, but they're not skyrocketing anymore. But let's look at inventory and see what's going on. 4, 3, 2, 1, 2. Got it. 43212 inventory. Wow. Up 68% year over year, but 20% below pre-pandemic levels. So right now they're saying there's 42 homes on the market in that zip code. But that's not the subdivision, or that's not the street level. Like if I'm working with a client, I go to the street level first and say, all right, has anything sold on the street in the last year? One of the problems we've seen with low inventory is there's low sales, low comps. Sometimes you got to go back a year. And it makes it a little more challenging to find a comp. But there's 42 homes on the market in that zip code. Last year, you had 25 homes. Year before that, 30, then 23. That was the low. Back in 2018, there were 52 homes on the market. So, 10 homes, will that make a difference? It depends on where they're located. I mean, it helps to have a couple of houses that have sold recently to do a comp. But if you're the only game in town that goes on the market and people want to be in Grandview, which a lot of people do, then you could still be very successful there. You just got to price it right. You just can't be greedy, right? That entry price point is really important. If you go in too high, then you got to come back and crawfish backwards and drop the price. You can make the actual end sale price lower than if you had started lower. So if the median price is what, 440 we said? Yeah, if median price is $440,000, and let's pretend that's what people are willing to pay, and you go in at 438, well, you probably have a much better chance of land or ending up at 438 than if you started at 460. And then you're like, I got to cut the price to 450. Now I got to cut the price to 440. Somebody then's going to come in, because if I was representing a buyer in that situation, I would come in and we would probably come in at a price of like 425, because I'm like, well, they already cut twice at 10,000 each. So it's probably a deal there. Maybe not, but that's the pricing dynamics in a normal market are not where you can price it high and kind of test the market. You want to price it to sell it, unless you just don't care if you move it. But that's what I see going on in that zip code. It just looks like there hasn't been an explosion of inventory, but you got to get very, very hyper local in the subdivision, street level, what have you. And obviously have them reach out to me if I can be of any assistance. Thanks for suggesting that. I never look at Grandview. So that's cool. And I don't know that waiting for spring would be any better necessarily. I always tell people if they don't have to sell their real estate, don't sell it. Just keep it unless you have to sell it, or, there's a life change or something. Ashland County, please. Do you think raw land will stabilize or price or keep going up? Okay, so I don't have access to understand if it's raw land or if there's a house on it. My data doesn't tell me that with Redfin, unfortunately, but I can look at Ashland County. Now, if you get with a realtor who has access to the MLS in Ashland County, which I don't think I do, um, then if you get with a realtor who has access to that data local to Ashland County, they can probably help with raw land much better than I can by looking at this chart, but I can give you an overall sense of the market there. It's just because the MLSs that I have access to is Central Ohio. I think there's like 10 of them in Ohio total, 10 different MLSs or something like that. So let's look at new listings of homes in Ashland, down 20%. And this counts raw land, by the way. They just say new listings, period. So it could be anything. It could be a duplex, triplex, a condo, a house. But you only had 11 and not a lot at all in the last week at the market. I mean, it's way down. Like, look at this back in 2024, you had, 16 homes on the market. So it's not that many more compared to 12, 4 more homes. But the percentage looks high. There's not a lot of inventory. Let's look at active inventory. Yeah, 97 homes on the market last year. 89 homes, so just barely a few more homes. 2022 was a lot more, 109. Not that that matters now. All right, let's do median sale price. Yeah, look at median sale price has gone up and up and up. $249,000 in Ashland County. That's up 6%. I wonder what this inventory chart looks like down here. I mean, I wish I had better news. 88 total homes on the market at the end of August. We already looked at that kind of with the weekly chart. But yeah, if you go back in time, you can just see all that inventory we had. We had a big spike, though. Look at that in 2021. There were some big spikes there of active homes hitting the market. I don't know why. That stands out a little bit. But then it fell. It fell fast. And now it's just barely rebuilding. So, if you go back in time, 2013 or so, there were 227 homes on the market. Now only 88. Yeah. So my guess is, and this is a pure guess, will prices stabilize? I mean, what are prices doing again there? They're kind of, yeah, they're still going up. I don't know. It doesn't seem like there is a opportunity for prices to fall very much there. It doesn't seem like there's a lot for sale, but you tell me on the raw land. Like, are you seeing a lot of high prices on just raw land? I know where I live and where I'm looking and where I just kind of trip around. Raw land's expensive in Ohio. I mean, comparatively to to Ohioans. Obviously, if you live in a different part of the country, it's cheap, but that's why a lot of data centers come here. I will say though, like I tell people all the time, if you don't want foreign companies, if you don't want tech companies putting data centers and taking our resources in Ohio, buy property. Not saying buy raw land necessarily, but buy property. But that's a house, a duplex, whatever. But the only thing you can do really is beat them to the punch and buy something so they can't have it. I think companies will continue to come to Ohio because of our resources and because of the tax breaks. And we gave Intel $2 billion in tax breaks, property tax breaks, right? Obviously, didn't give any homeowners around the area property tax breaks. I know several elderly homeowners in the Johnstown market. I mean, they can't, they're going to have to leave their house. because of Intel, and they haven't improved their house at all. So I think that's going to continue to happen in raw land, more and more development. Are you looking to build something, Jerry, or are you going to develop something? What are you going to do there? Just curious. Now we need to spread the Ohio memes to deflate migration to the state, keep demand artificially low. Okay. I don't know if that'll actually have an effect though, right? You're just kidding around, I'm sure. Market will collapse. I know you're on some real estate. You're trying to get the maximum for it. Watch and see next year, half off. Okay. Half off. Well, I'll be buying, man. It's half off. I'm buying. Half off. Look, a lot of people have the idea, and I don't blame them for this, but they think that because I'm a realtor, I'm like, hey, I want prices to keep going up. And because I own rental properties, I'm like, oh, I want the price to keep going up. I don't want them to be unaffordable for people. I want to help people buy and sell properties. And quite frankly, if prices crash and they get really cheap, if like during the great financial crisis, when they got cheap, a lot of people piled in and bought. So the fact that home prices have been so elevated has actually kept transactions low, and most realtors have suffered because of that. So it's kind of like a paradoxical reality that higher prices and a crazy housing market actually mean lower income for realtors because there's no transactions. A normal market's much better. Where like before COVID, right? It was kind of a more normal market. I would rather prices stabilize and become more affordable, or maybe stabilize for a few years until incomes catch up, versus see them continue to go up like this. That's not healthy for anybody at all. So maybe I'm different, but I just don't think I don't think that we need higher and higher home prices. Just bought a house in Fairborn, Ohio. No price decrease in this area. Selling house in Painesville. No price drop there either. Cool boots on the ground info. So you're like, hey, I bought a house. I paid what the seller's asking. I'm selling a house. The buyer's paying what I'm asking. Okay. Good. I'm guessing there's not a lot for sale there. Michaela, how are you? Guernsey County, please. Sure, absolutely. Hope you're having a good morning, Michaela. Let's do Guernsey County. How did I know you were going to ask about that? Guer. Guernsey County. Well, this is going to be way up and down with pricing because there's probably, there's not a lot of transactions there. $190,000 is the median home price in Guernsey County. Let's look at inventory and see where that's gone. Yeah, 119 homes on the market, but that's actually, the weird thing is, look at this. This is down. I'm sure you know this more than anybody. Like, this is down. Like in August of last year, you actually had 151 homes on the market, and now 119. So inventory's been falling there, which is completely different than a lot of other markets in Ohio where inventory has continued to rise. Now, it did come out of COVID, right? As far as the number of homes for sale, it came out of COVID when you were only at look at this, 104 homes at one point in August. August of 2023, only 76 homes on the market. Man. And then it went up a lot, all the way up to 151 homes, but then it decreased this year. So my assumption is people put homes on the market, then buyers came in and said, looky, there's a house for sale. We can, something actually on the market we can buy. And they did. So now 119 houses on the market. Let's look at, let me do this for you. Let me look at months of supply. So this measures the supply-demand equilibrium if you will. And how they get this metric is they look at the total number of homes on the market now, and they say, all right, if we didn't add any more homes and we have the current pace of sales, how long will the current inventory of those 119 homes last? Well, you can see during 2012, it was 9, which is high compared to what we're seeing now overall. 9, 11. Here's one at, what's this one? Oh my goodness. 14 means it would last 14 months before we would deplete all the supply. Well, now you're at 3.6. So the inventory would only last 3.6 months there if you had the current pace of sales. 3.6 months is a seller's market, pretty much, meaning the sellers are in control still because demand is outpacing supply. The only problem with this metric, then I usually don't show it, is because you have to look at the type of home, right? Because if the market, like in Columbus, is filled with a bunch of houses people don't want, once the supply looks elevated, in reality, it's not. So during COVID, you can see it was down to 1.5, meaning sellers were completely in control of the market. It's gone up and down, but trending somewhat up. So the fact that we're at 3.6 means you're headed to more of a balanced market, but still sellers are in control there. So the more of the story is, if you are in a seller's market like this and you can get a discount off a property, good for you. You're doing something right, because not a lot of people are getting big discounts. At least when I look at this data. But there definitely isn't an explosion of inventory there. That's for sure. Let's look. Let me just put it in here and see what happens. It's probably going to look near the same. Yeah, this is not going to probably help us much. No, it's not going to, because there's just not a lot of transactions. That's why this chart down here is a little better to read. So let me just check pricing again. Median sale price. What do I got? 190,000. Yeah, I mean, the peak was just last month or 2-3 months ago at 214,000 in median sale price. Let me see if there's anything else in here that would help you. Off market in 2 weeks. Yeah. Sold above list. This may help a little bit. So 18% of all homes were sold above asking price in Guernsey County. So there's, nearly 20% of people buying homes in the county actually paid more than the seller was asking. Now, sometimes that's because they would go in with FHA or VA financing or something, and they want, or even conventional, and they want the seller to pay closing costs, but they're willing to pay over asking to get the cash at closing. So sometimes that's what happens, but there are still people, and I think nationally it's like 25%, nearly a quarter of all buyers are paying over asking. It's crazy. So if you get a discount now, good for you. Thanks, Michaela. It's good to see you this morning. You're welcome, Dane. Thank you. Yep, I looked at Clermont County. Stark County Treasurer told me yesterday that the state has pressured to raise housing assessments because we were below national average. What? Oh my goodness. Is that Phil Davison? Wasn't he from Stark County? Remember that guy? One of the best YouTube clips ever, by the way, is Phil Davison. I think he's Stark County. Stark County Commissioner is what he ran for, right? Yeah, that's sad. I don't know if that, I'm not saying you're incorrect at all. I have heard those things go on that are going on. I mean, it'll be interesting to see if that property tax abolishment. And by the way, if this is true, this is the reason why I think that the property taxes don't work the way they're running. Because with a sales tax, the tax is the tax. If I don't want to pay an additional sales tax, I just won't buy that item. right? Like if I'm like, oh, I mean, when you have necessities you have to buy, that's fine. But if you're like, I'm thinking about buying a new iPhone. Well, my current iPhone's okay, but I really want a new one. Well, knowing that you have to pay more sales tax now than you did last year for the iPhone, maybe that'll, it gives you a choice. I either buy the iPhone or I don't. I pay the sales tax or I don't. It's kind of up to you versus this situation where you've got somebody behind the scenes going, hey, we need to kind of assess the properties more, right? We need to make them higher so that we can collect more property tax. I'm sure that goes on. I mean, I heard, like, for instance, one of the figures I was just looking at was that Licking County, where I live, spent like $1 million in their property tax assessment software. So it's not the 22 billion that we pay in property tax per year as Ohioans, 22 to 24 billion, but it's, $1 million of money that we're spending as taxpayers that has to be paid for somehow, probably by property taxes, to actually run the software to even assess our homes. And I notice a lot of the properties that I see assessed, and here's this crazy part, a lot of them are underassessed. Like the value that the county auditor is coming up with is under what you would typically sell the house for. And there's some areas of the country, like in Texas, where that's the opposite. They're assessed for more than you can sell the house for. At least we're not in that situation yet. Mostly. I'm not saying that's the way it's happening all across Ohio, but generally speaking, what I'm seeing is the assessed value is lower than what you can actually sell the house for. So there's a gap there that they could capture potentially. And that's probably what you're talking about. Not good. Not good at all. But if you live in Ohio, plan on higher property taxes for longer. Sure, it could get passed. The Ohioans could say yes to the abolishment, but they may not, right? It may not happen. And it'll probably be held up for who knows how long with bureaucracy. But plan on paying property tax higher for longer. I don't think it'll come down. Just Mo, I just appreciate you covering this. No problem, Just Mo. I appreciate you, the support, and you taking the time to watch and interact. Fairfield County. Yeah, here we go. Talk about Fairfield County. I mean, this Fairfield County is a great example where property taxes have gone parabolic. Like I, as an investor looking at deals all the time, I'm not seeing amazing returns in Fairfield County because of property taxes. I mean, it's literally property taxes in general kill almost all the deals I look at. Almost all of them. Because I'm paying a lot more than the owner usually did, right, for the house. And so they're paying maybe $2,000-3,000 a year. I'll be paying $4,000. It's like, all right, well, I can't make that up in rent, not realistically. All right, let's just look at this first. 28.6% of all homes in Fairfield County sold above asking. 28%. Just looked at Guernsey County. It was only 18 point something. Fairfield County, 28.6%. People are still paying over asking. Nearly a third. I mean, it's creeping up on a third, right? Let's look at inventory. Okay, so this chart looks much different than some of the other ones, right? I mean, you're at 534 active homes on the market in the whole county. And if I go back, I mean, if I just drew a straight line across, I'm going back to 2019. That's 530 homes. How did August do that year? 617. You're right under that 2019 level. And in 2018, August, you had 627 and 644. But if I go back even to 2015, look at this, 574. So inventory, you're definitely growing it more than you were, or more than other counties are. That's good news. I mean, you're up 21% right now in the number of homes for sale. That's great. Let's look at home sales. Are people actually selling homes or buying homes? I'm sorry. In I guess selling too. In August, in Fairfield County for August, 13% up year over year. Wow. More people buying homes and right now than last year. Let's look at new listings. I bet those are up. Yeah, up 7.5% in the new listings. People buying, people selling. Oh, that's great. Median sale price. What's that done? Median sale price is up 5%. Let's look at the value. Where's that gone? $354,000 for Fairfield County. Wow. Not an all-time high, but really close. You hit that in February of last year, 357. And so you've actually been down all this year, year over year until, right? No, I can't say you've been down, but you're down from the peak. So that's an improvement. At least you're not past the peak, right? Yeah. $3,000 off the peak. But if you just look like if you were to look at an overview of the shape of the map of the chart, you can see that home prices were going up during the summer, then down in the winter every year as we went on. And then when COVID hit, look what happened. Like, where did COVID hit? Right there, right? $236,000 in March of 2020. Very quickly, that price in a couple years was over $300,000. From 2020 to 2022 is when Ohio got wrecked. Not only with inventory going down, but prices going way up a lot faster. That's when Ohio was wrecked. Those 2 years did not do us any favors at all. And then since then, when it kind of, in 2022, it hit 330, right? August of 2022, you were at 310. Then it wasn't no longer were you seeing this rise. It's kind of gone. I mean, it has gone up, but it's nothing like this rise here that you saw during COVID. So prices have somewhat stabilized, although they are climbing. And inventory, though, this is the thing that's on your side, is you're gaining inventory. That's good. Now, I don't know if it's the right homes for sale, right? I don't know if they're homes that make sense for you, whoever for whatever you're looking to do, but at least you have more stuff for sale. But Fairfield County's big. Like, it encompasses Lancaster all the way up into like the suburbs of Columbus. So there's a lot of diversity there as far as inventory. My guess is still move-in ready, good houses in good areas still, and priced right, probably still move. That's my assumption. But thanks for suggesting TH2, Fairfield County. I feel like prices could come down in North Canton because property taxes are so high now. Yeah. Well, here's the other thing. The other side. So there's always a trade-off, right, for things. If property taxes are eliminated, home prices will probably go up because buyers will be able to afford more of a house. Like when you go to the bank to get a loan, you go to your lender and they say, well, here's your principal and interest payment. And then, oh, here's your insurance payment and here are your taxes. Well, moving forward, if the property taxes are abolished, that $400 now isn't paid anymore. Now you're still paying it with sales tax, but my guess is that buyer now would qualify for a higher loan amount. And if that's true, they'll be able to pay more for a house. I think it could potentially raise property values or prices. I think that would happen. So that's a give and take of it. I don't have an answer as to why or as to how to navigate around that, but I do think home prices will increase if we abolish property taxes because people will max out their debt to income ratio to buy a house. So the fact that they're high right now, yeah, that could reduce prices, right? Because you're like, well, nobody can afford the payments. Let's look at Canton. You say North Canton. This will be fun. Let's look at this. I was just looking up some zip codes. 44701. Am I too far north? I think I am. There we go. 44720. Is that North Canton? I wish it told me on this map. $44720 up 5.3%. Is this North Canton? 44718. Yeah, that's Canton, right? I think that's North Canton. Up 6%. Wow. Year over year in home prices. Typical home value, $356,000. Wow, Canton's expensive. North Canton, yeah, you're right. It is expensive. Yeah, look at that. That's only $280,000 in 44720. 44721, 289,000. It's these zip codes rate. Yeah, this zip code 44718. It's really that one, right? Is that the area you're talking about? $44709, 183 grand. But yeah, they're all up in this area here. Am I in the right? Let me just double check this. Sorry, I should know my geography better, I guess. Okay, so I just Googled this. 44709, 44720. Yeah. So this is North Canton, I guess. 280,000. Yeah, up 5%. This one was crazy. 44718 up 6%. And it's $356,000. So yeah, home prices are up there. And they're expensive. And again, there's some areas like, what's this zip code? This may be in Canton itself. I don't know. $68,000 for the house, for houses, down 5.5%. I'm seeing it inside the city. Definitely seeing price pain inside the metros. Like the biggest decline I know in the state that I've looked at is this one, I think, or nearly the biggest decline out in Youngstown, 44506, down 11%. But look at the other areas of Youngstown around it. Like they're up a lot. I mean, but homes are only 160, 130 grand. So maybe that's why. But yeah, up 6%, up 7%, up 7.6% in Youngstown. Goodness. Thanks for suggesting that. We're talking about it. Hey, appreciate it, Dane. Always appreciate a sub. Thank you so much. Yeah, my client who lives in North Canton was telling me how massive the recent tax hike was. Tax out of our own homes eventually. Yeah. I mean, it's story after story. And so is there an easy way to solve the problem? No, not easy. And it's going to be pain for somebody. Like you poke on one side of the balloon, the other side of the balloon pops out, right? The air has to go somewhere. So we have to fund the schools. We have to fund the services. You absolutely have to, obviously. The money has to come from somewhere. So they either send people bills in the mail, which a lot of people won't pay, or they're going to have to just tax us somehow. And again, I'm fine paying for the services. I just, the unrealized gain part is not good. And if you're a senior citizen and you don't make anything and you don't spend anything, to have your taxes continually go up, it's like, doesn't make sense to me. It just doesn't. There's like a working group that the governor has put together, Governor DeWine, to try to figure out what to do about property taxes. It's probably a waste of time, right? I mean, anytime somebody says a working group, back when I worked at corporate America, you're like, I'm going to run the other way. A working group, huh? That's why I like the initiative, is because the citizens were like, you know what? We're just going straight for the throat. We're going to blow this thing up and make you figure it out. So, and if they can't, if the property taxes are abolished and they can't go back to property taxes, what are they going to do? Have to do something. And they will. They're not going to like not fund things, and they're definitely going to collect their money. Yeah, I just looked at North Canton. There you go. We increased 1,000 this year. That's how much your property taxes went up? Goodness gracious. 2,200 brick ranch built in the 50s. Obviously nice. I mean, that's crazy. It's not like you live in a 5,000 square foot mansion. The public officials are giving themselves and city workers big raises to compensate for the high inflation, which is why I think they're going gouging their citizens for property taxes. Yeah, that could be, and I have no problem paying for the workers in the city, for teachers, for the administrators, for firefighters, for anybody who's running the city. If they're doing a good job with the area where I live, they do a fantastic job taking care of the village and the county, in my opinion anyway. And the schools are good. No problem paying for that. Again, just don't tax me on an unrealized gain. Because my guess is like, and I don't know if we'll see it, but if home prices really fall, and I'm curious what happens to other areas of the US, like in Florida, Texas, in Denver's in a world of pain right now with property values. If those crash and fall, will their property taxes go down? I don't know. Oh, you're talking about vacant land? Lake County, I did that earlier in the video. You can watch the replay. I did that one. We are doing serious budgeting. Taxes now at $3,800 a year. 22, it was $2,400 a year. Wow. That's what I'm saying. Like, you have to budget an increase every year. You have to plan for the worst, hope for the best, but plan for the worst. Taxes will continue to go up. There is no doubt about it. Property taxes, or I'm sorry, you say houses are going quickly. Still can't understand how with high property taxes going so high here. I'm not, who knows, right? There are people buying homes right now all over the US, in Ohio, no doubt. One of the things I see is that a lot of homeowners, a lot of home buyers don't check what the real property taxes are before they pull the trigger and actually close. Like, they'll look at the Zillow property tax rate and go, oh, or their mortgage or loan officer will give them a payment. And they're like, okay, there's my payment. Then after a couple of years of being in the house, they're like, uh-oh, the property taxes went up a lot. Or the real property taxes are this much because the information on Zillow was wrong, or the loan officer had it incorrect. So a lot of people get blindsided by the property tax, especially like with insurance. You can get really hammered on insurance. So it's I don't know how people are buying them, but they are. Yeah, I looked at that one, I think, right? 44720. Evil overlords. The economy in Akron is kind of stagnating due to the commie mayor. Dave Triple D, in your experience, what is the average down payment you're seeing for a first-time home buyer lately? 20% was a lot more reasonable before it was a full year's salary. I mean, I help people that use. That's a great question, Dave. Thanks for checking in. Like, I've helped people who put 20% down. I help people that put 3.5% down. I think the average down payment in the US right now is like, don't quote me on it, but I think it's like 11%, the average down payment that people put in for first-time buyers. Yeah, I see everything, honestly. I do. I don't usually see more than 20%, but I definitely see 20%. I see 3.5%. There are ways, and I'm not a mortgage professional, so you have to consult one to get more details on this, but there are different programs that you can take advantage of where there's a grant they'll give you and a second loan for the down payment. So sometimes people bring 0 to closing. That does happen. That does happen. Geeks of Rage. If you guys want to check out a cool channel, by the way, that talks about retro gaming, retro movies, all kinds of cool stuff like that. And you want to check out geeky stuff, check out Geeks of Rage. This channel is pretty cool. I know the guy that runs this, and I'm actually doing a video with this guy tomorrow. We're talking about our top 10 horror movies. So, yeah, I am a geek at heart, and I'm looking forward to that, Eric. So, thanks for checking in. Let's see what you had to say, though. It's not, and it'll change. We all just need to be patient. It's not what? I don't know what you're talking about, Eric, or Geeks of Rage, but I blew your cover. But, gotta head back to work. Just wanted to drop in while I had a few minutes before getting back to work. Staying patient, everyone. The prices will come down in time. I don't know, man. I don't know. We can debate that all day, but prices may soften. And it depends on where you live, but inventory seems to be a big problem right now. And if interest rates come down too much, like if they came down into the 4s, I'm not saying they will, but if they did, that'll blow the market up, I think. I think a lot of people run out and buy a house. Saw 4 acres go for $84K. Jeez, that sounds like a lot, depending on where you are. Thank you for checking that out. Appreciate it. Yeah, you're welcome, Jerry. Consumption tax on a vehicle would change pricing. On vehicles, you mean? Like, were you talking about like a sales tax on when you buy a car or register a car? Is that what you're referring to? Delaware County. Yeah. Yep. Let's do that one. I got a couple more in me and then I'm out. Delaware County. Got 802 homes on the market in Delaware County. And they have grown inventory. You can see that, right? We had looked at Guernsey County a little while ago, which is obviously a completely different market, but they had inventory spiking, then it fell. Inventory continues to build there in Delaware County. Although if you look back to the left, like we have all throughout this live, a lot more inventory back in the day. It just angers me to no end when I hear people say that, when I hear pundits on YouTube talk about how we don't need more new houses and we've got tons of available inventory and we don't need to build anything. I'm like, okay, well, maybe there are houses hidden that I'm not seeing that are available for anybody to just walk into. But it's just the inventory has not been fantastic. It's definitely better than it was during COVID in Delaware County, but still not amazing. Okay. Well, let's look at new listings. Are you adding any new listings? Actually, let me go back to inventory real quick. Year-over-year change. Up 26% in the number of homes for sale in Delaware County. And it's gone up. I mean, you can see that percentage has continued to rise. So you are adding more and more inventory. Let's look at new listings. New listings up only 2.2% though. But it's a big ship, so it's going to take a while for it to obviously stabilize if you are going to add inventory. Look at home sales though. Wow, down 14% in Delaware County. And buyers checked out of the market last month. Jeez. All right, let's look at median sale price. That's up 4% year over year. But again, look at this. Wow, this graph is really telling. Look at the trend of price growth. Look how it's shrunk. Like it went up a lot during COVID. Literally, you can see it. Price growth continued to rise and rise and rise all the way up to January. It was up 27% year over year. What? People were like paying anything for a home. Whatever it costs, we'll pay it. One of the reasons why they did that, not because of stimulus necessarily, but because money was so cheap. I mean, when an interest rate's 3.5%, you can afford a lot more of a home than you can when interest rates are 6.5%. That's why if interest rates drop to 4%, 4.5%, I think under 5, people start seeing a 4 handle on their rate. I think you'll see more people run back into the market. So then you could see home price growth slowed. It's slowing. No doubt it's slowing. No doubt. Let's look at the value. $524,000. Wow. And yeah, COVID like hit. Where's COVID? Right here, right? Right around here. COVID hit and that number just skyrocketed upwards, although it has been going up still. I mean, you're still climbing. Where's your peak? 533 grand, 538 was a couple months ago. Yeah. Still horribly expensive. Gonna have to have a lot more inventory, I would imagine. You know, Delaware County is interesting because there are a lot of areas of Delaware, the city of Delaware, where homes are older, right? Still expensive. And then you've got areas south, like in the Powell area, I think, and even in Dublin, I think some of that school district is in Delaware County. Homes, a lot of new homes, right? Hmm. Yeah, let me just look at a couple of zips there with pricing. So Delaware County, like 3015. Yeah, 43015 is there. So up 2.5%, right? Here's 43061 up 3%. One seven. 43074 43. Yeah, you can tell. There it is. Yeah, 2.5% up year over year, according to the zip code map, anyway. You can kind of tell because the homes are expensive. Okay, here's one. Look at 43066. Is this Delaware County? I may have to figure out another way to have this information at the tip of my fingers. Yeah, it is in Delaware County. So $405,000, up 1.5%. So, and this is Zillow data that I'm looking on this map. That's how the map was built. So prices are growing there. They're not growing at the rate they were leading up, into COVID, but they still, they're definitely growing. This would be interesting to look at. Let's look at inventory. It would be yeah. So like this zip code here, 43066. Look at the inventory change. Oh, there's only a few houses on the market. Never mind. That one's not going to work. 43040. Is that Delaware County? I apologize for my ignorance. Well, this experiment has failed. I mean, there's nothing there for sale at all. It's 43065. Yeah, this is Delaware County too. So 43065, there's some more data. 63% increase in inventory year over year, but you're still 30% below pre-pandemic levels approximately. And look back in 2018, you had 167 homes on the market. Now 119. So you are coming out of that COVID low of where you only had 61 homes on the market at one point. Look at this, 58 homes on the market. Holy Toledo. Nothing. And that's why prices went crazy the way they did. So I guess in Delaware County, you can see the inventory build. By the way, where you're seeing new construction is where you'll probably see more price decline for existing homes. Because there's not a lot of areas like that in Ohio where you're like, there's a ton of existing homes and then they're building a ton of new homes right there. It does happen, but the point is new construction can compete with existing homes. And that's like why we're seeing huge price declines in like Dallas, Denver, Houston, parts of Florida, parts of the Southeast. You're seeing massive price declines because there's a ton of new construction that's competing against the existing inventory. And new construction builders are offering crazy discounts, like crazy, rate buy downs, where you can buy your rate down to 4%. And you get a free, granite counters and flooring or whatever. And those are hard to compete with existing homes. So I think like an area like Delaware County, Union, Madison County, where like that Plain City, Jerome Village area is, I think, if you look over there, there's a lot of new construction. And if you're somebody that bought a new construction house 3 or 4 years ago, or you have an existing house in that area that's not updated at all, you may struggle a little bit against the new builds as that inventory, increases. But people want to be in Delaware County, so I would think that it'll continue to be strong, but we'll see. Thanks for suggesting Delaware County. Abolishing property tax, schools and others would still have the ability to put levies on the ballot. Just stop basing our taxes on real estate value by those assessing our value. Agreed 100%. That's what I think it all comes down to. Very well said. Tryhards. I live in Westerville and New Albany area, and I can't decide if I want to keep this house as a rental and build new or sell it and build. Interesting times right now. I mean, unless you have to sell the house, keep it. Unless you have to sell the house, keep it. I probably talk more people into keeping their homes than I do actually selling homes. Probably not what a realtor should do, but it's what I do. My first house was in New Albany, and it was a small ranch. It was in the Columbus City Schools, though. It was like north of 161. And we bought a house. This is like 2000. I'm trying to think, like 12, 13 or so. We bought a little ranch over there, and nothing special, like 3-bed, 2-bath house. We tried to sell it because we wanted to move. We wanted to be in New Albany schools because we were going to have a child. So we're like, oh, we want to be in New Albany schools. So we're like, well, we'll sell this one. At that time, and I had had it for a couple of years, I couldn't get, we were going to break even basically on the house because we were only in it a couple of years. That was when the market was normal, right? When you can't just sell a house the next year and make a ton of money. Well, we were like, oh, I guess we'll just rent it. And we rented it, and it was an alligator, meaning we lost money every month, but it was appreciating. And I was like, that's fine. It's like $150 a month we were losing. We hung on to it, had a great renter in there, started to make cash flow on it. In early 2022, when I got into real estate as a profession, in 2018, I got into real estate, but in 2022, we decided, let's sell this because the market's really good. Let's sell it. We'll take that cash, invest it into some rental properties, even though we already had one in the house in New Albany. Sold it. A month later, Intel was announced. I mean, if we had that ranch house right now, it would be renting for, I don't know, could be renting for $3,000 a month. Easy, I would think, over there in New Albany. And our taxes would have gone up. Our cash flow would have increased exponentially. We had a great interest rate on it. Probably one of the worst mistakes we made as real estate investors was selling that. Not saying you can't or you definitely shouldn't sell your property, but man, try hard. I would try hard to keep it if I were you in Westerville or New Albany. Unless it's a complete albatross and a complete alligator, I would hang on to it. And I don't know what your plans are for the future, but as If you look 10 years out, 15, 20 years out, what does that thing look like then? What does it look like for your kids? I don't know if you have any kids, but if you leave it to anybody after you pass away, the tax benefits are massive for them. And they could be for you too. Like you could sell it and exchange into something else, right? Like you could keep it as a rental. Depending on how you treat it, you could exchange it in a 1031 exchange, defer your capital gain tax, and buy, I don't know, another rental property, something bigger, something better. But whatever you do, make sure you talk to a tax professional if you move out and keep it as a rental at all, and then sell it, because you can get whacked. You can get completely whacked if you sell a rental property and you don't have that planned out. Unless you buy another one, then you can defer the tax a lot of times. But I would keep it. That's my vote. But it's good that you're in that position to make that choice, right? Still waiting on information in Clermont County, 45140. Okay. All right. All right. Didn't I just look at that area? No. Yeah, I kind of did, didn't I? North Clermont, 45150. Let me look. 45140. These all run together sometimes. 451. Let me look it up real quick. Hang on. Sorry. My bad. 45150. Ah, northeast of Cincinnati, right? I wish I could just search on this map and it would just pop it up, but it doesn't. 150. Look at that. 45150. I found it. All right. Hopefully this helps you. And sorry for the delay. All right. Inventory only up 11% year over year. All right. So you have more homes for sale, but not a ton. And look at this though. This is interesting. You actually have more homes for sale than you did before the pandemic. You've got 70 homes on the market as at the end of August. Before the pandemic, you had 61. And it dropped all the way down to 26. So that's good. You're building inventory. Good for you. Now let's do this. Let me look at prices now. $45150, right? That's what we're looking at. Yeah. 45150. Yeah. Okay. Year over year shift, 2.8% up in home prices. $329,668. They say that's the median home price. So home prices are going up year over year there. And inventory is growing. So let's I'm just thinking about how to look at this. I did Clermont County already. I can't really give you another look other than this. So I guess this is the best I can do, unfortunately. 2.8% up in prices year over year. I did Clermont County earlier, so you can kind of have a whole look at the county. $330,000, the typical home price. And then we know that inventory in that zip code is growing. So you've got more homes on the market. But I mean, it's not like you've got, there's a few more than COVID, 30 homes or so, 25 homes. I wonder, let me look at this. Is that Milford, Ohio? Is that what that is? Milford? Let me do this. Place. Milford, Ohio. This is a guess on my end because I looked up that zip code and that's what it said. So in Milford, Ohio, median sale price $378. Okay. I was just kind of curious if it showed us anything different. Well, I wanted to look at the inventory trend. Yeah. So 20 homes from the market right now, you can see it actually back in 2012, 2013, 2014, you actually had 53 homes. So, I mean, you're way down comparatively on a percentage basis on inventory, but it's not like hundreds and hundreds of homes or thousands of homes different. You probably just need more inventory. I'm wondering if the median sale price, yeah, I mean, you can see how it's performed, right? It started back in 2012. Wow, look at that. $55,000 to buy a house back in 2012 there. Now 378. My guess is a lot of new houses. That's a complete guess. I mean, your all-time high was actually in 2022 at $416,000. But it's up and down a lot because there's not a lot of transactions. All right. I'm wiped. So I've been doing this now, what, 2 hours and 27 minutes? Goodness gracious. But I hope that helped. I didn't get to everybody, I'm sure. A lot of good questions, though. I always learn a lot from y'all. I hope you learned something today. If you did, subscribe to the Ohio Housing Nerd, share the channel, and I will see you next time on my next live. I hope you have a great weekend. I'm the Ohio Housing Nerd, and I am out. OUT out.